But we very much believe like those dollars that you're using as collateral, you should be earning that yield yourself. So our
Alrighty, what is going on, Wealth 28 Club members? Welcome back to another educational video breakdown. In today's video, this is going to be a very important video breakdown talking about strategy, talking about the goals in which we are attempting to achieve and establish as DeFi investors, creating a rising equity curve over a prolonged period of time, and one of the strategies that we can partake in order to do so. I'm going to be sharing my portfolio with you all, some of my perspectives about the market, just kind of free flowing and going down the rabbit hole as to what's taken place over the past consecutive couple of trading sessions via this most recent market downturn. Depending on when you're watching this video breakdown, most individuals in the crypto space just experienced a massive decline in their overall crypto portfolio. However, outside of my long-term bags via my volatile cryptocurrency assets, my stablecoin portfolio that I mentioned to you all that I was building in the DeFi space barely moved at all and consistently was earning over this most recent market downturn. So I want to stress the importance of attempting to start to build a DeFi stablecoin portfolio. Again, it's not financial advice. I'm just going to share with you my personal opinion, my perspectives, and my positions. And we're just going to go down the rabbit hole. So make sure that you stick around. If you enjoy this video breakdown, do me a favor. You guys can comment in the description down below of this video breakdown. Let me know what you think about it. Let me know about your personal strategy, so on and so forth. Maybe what you're doing in the markets surrounding a possible DeFi stablecoin portfolio. So I have my notes here. I'm just going to free form. We're going to cover some different things. I'm going to share screen with you guys. We're going to go over the most recent market downturn. I'm going to share my portfolio, and then we're going to get into some positions that you could possibly consider getting into and look at some percentages moving forward, thinking about the next bull market cycle, what you're going to do with your profits, what to do in market downturns, so on and so forth. So let me share my screen with you guys real quick. And I actually wanted to start here on the X space because one individual mentioned in the comments on this post that I made where I said, right now, 2,000 units, and this is August 4th, 2024. So depending on when you're watching this, this might be old, this might be fresh. Again, this is just to get the brain juices flowing and get you to see the opportunities that are available in DeFi. I said 2,000 units of XRP is less than $1,000, which is an absolute steal right now. I think XRP via this most recent market downturn dropped to like 44 cents. I personally scooped some up because I'm looking to accumulate XRP for the future. So that way I can deploy my XRP into the DeFi space of the ecosystem on the XRPL once it matures a little bit more. Now, I have a very large bag of XRP that I will never ever touch that sits in my cold storage wallet. But recently, I've started to accumulate more XRP every single time we get these discounted prices. So that way I can take that XRP, that portion of XRP that I'm building now outside of my long-term bags, to start to deploy into DeFi protocols once the ecosystem matures further in the XRPL ecosystem. Okay. But that's besides the point. The comment down below is what I really want to touch on. The individual BB said on the X space, how do you stay calm during market downturns like this? And what are you looking at purchasing? All right. So I want to answer this question. How did I stay calm in this most recent market downturn? Because a while back, I believe it was, let me check the date. It was on July 17th. So well before this most recent market downturn, I mentioned to you guys in the private CYPRX Discord, I said, here's my updated portfolio after taking a more laid back approach in this market and putting most of my capital and redeploying it into stable coins. I told you guys I was starting to move most of my profits and most of my capital in the DeFi ecosystem into a stable coin portfolio. And so as of right now, as of time of recording this video breakdown, this is my most recent updated portfolio. You guys can see that I'm deployed on two different dexes on Aerodrome and Ramses, currently making about $700 as of time of recording this video breakdown per month on roughly about $18,000 worth of capital deployed on nothing but stable coins. Now, given this most recent market downturn and some of the information that I'm going to go over today, This portion of my portfolio remained absolutely stable. I consistently earned throughout the entire market downturn, even though billions of dollars was most recently liquidated from the crypto ecosystem, which allowed me to, again, solidify my long-term trajectory of this market, which is up, bullish long-term, and allowed me to stay calm because I was consistently earning when everybody else was losing. Now, yes, I admit my long-term bags and my cold storage wallets, yes, they depreciated in value, right? But again, those are bags that I'm not even concerned about. Those are going to stay in my cold storage wallets till probably 2030 and beyond, so I could care less, right? But one of the ways that I was able to stay calm during this most recent market downturn is seeing all the fear, uncertainty, and doubt in the market, but seeing my crypto portfolio and the stablecoin DeFi ecosystem consistently earn every single day during this most recent market downturn, which has pretty much started since the beginning of July. I've been earning on my stablecoin positions, right? Which has allowed me to stay calm, remain optimistic, and understand that I'm still making money in this market when everybody else is losing, which is why I recommend that you all start to take into consideration building a stablecoin portfolio. Even if it's not a significant amount of money, you should start to think about earning yield on all of your dollars. Every single dollar that you have to your name, your entire net worth to a certain degree of liquid capital should be earning you money. That's my personal opinion, and we can listen to large institutional investors say the same exact thing on stage. Here is a video clip of an individual representative going on to say the same exact thing.
Organization, T-bills, you are the largest issuer.
Yeah. I mean, it's almost too stupid to say, and we're at a place called Token 2049, so obviously tokens are very front and center for a lot of what we're talking about, but like you actually have to do something with the token in order for the tokenization of that asset to be worthwhile, right? If you just tokenize something that you're going to buy and hold and then later redeem when the asset matures, like that was stupid. You didn't really need to tokenize that. You could just use a PDF in like a Web2 form, and like you actually don't get any real benefit from tokenization. The major benefits of actually tokenizing these assets are you do something, usually we call this DeFi, where it's sort of one of two forms. You're either using the token as a means of payment, so stablecoins come in here very strongly, or you're using it as a form of collateral for some sort of other financial activity. So there are two major uses of stablecoins right now. They're largely used as dollars on crypto exchanges in terms of pairs. Tether is primarily used in this context. So if you're trading BTC versus USDT on an exchange like Binance or OKX or Bybit, et cetera, you're trading against the USDT, and so you need to have the USDT on that exchange. Yeah. USDC is more used in DeFi, where you're trading things against a cash leg, say LPing in a Uniswap pool. But we very much believe like those dollars that you're using as collateral, you should be earning that yield yourself. But we very much believe like those dollars that you're using as collateral, you should be earning that yield yourself.
All of your dollars should be earning yield, even if it's just $1, $5, $10. The amount shouldn't matter. You should be attempting to combat against inflation, and you should be attempting to combat against the devaluation of your currencies. So the amount that you start with is irrelevant. It's the idea behind earning yield, okay? Once you generate that mindset, this type of investing becomes like drinking water. So you want to start with setting yourself some clear and consistent goals, all right? Set those long-term goals. Understand that this is not a get-rich-quick scheme in the DeFi space. We're not here, at least personally me, I'm not here to get rich quick overnight. My goal in DeFi is to constantly earn yield, no matter what I'm doing, no matter where I'm at, and to not see high price fluctuations in my portfolio. And in order to do that, I started to build a stablecoin portfolio. And this most recent market downturn tested my strategy. It tested my strategy, it put it to the test, and it worked. I did not lose any value in my stablecoin position, right? You guys can see the $18,500 that I currently have invested in the DeFi space in stablecoins remained at $18,500, which was absolutely phenomenal to see. I wasn't sweating about it. I wasn't thinking, oh my gosh, my portfolio is down 50%. None of that. I was constantly earning on this money throughout the entire market downturn, right? So set those long-term goals. My goal is to have $100,000 in stablecoins constantly earning me yield. Think about it. Right now, I'm earning about $700 per month on 18 grand. Imagine how much money I'm going to be earning on just stablecoins on $100,000 in the near future. right? And then imagine if the bull market cycle really does take off and my portfolio, my long-term bags, which is roughly about 260 to 270,000 at the peak of 2024 is about $290,000 in value. Imagine if that does a 10x or a 20x. I'm 110% going to be taking about $500,000 worth of capital and plugging it into stable coins in the DeFi ecosystem that are going to constantly earn me yield. You're talking about retirement level income right there. Okay, just off of DeFi alone. So again, take into consideration in that $500,000 or that $100,000 once I get to that part of my investing career, right? Because it's in stable coins, I don't have to deal with market volatility. It's just constant passive income. Now, my goal as a stablecoin investor is to look for DeFi positions that are earning over 20% APR. Now, I don't know if long-term that's going to remain on the table, but for right now, that is my goal, is to be in positions that are earning more than 20%. Okay. So with that in mind, I mentioned set long-term goals, right? Understand the growth cycle over the long term, just dollar cost averaging into stable coins and compounding. Every single time you earn, every single week, every single month, you're taking that money, you're putting it back into the account to grow, grow, and grow. You're not using that profit for anything except buying more stable coins and compounding them back into your account, right? Setting those long-term goals. Not chasing high yields. I understand that on a lot of these dexes, you can go and you can earn 1,000% APRs on a crypto pair up against a stablecoin or a crypto versus a crypto, right? But you do have to take into consideration that market volatility. For example, this most recent market downturn. Imagine how many cryptos out there, if you're in a DeFi position, throttle down in APRs, and most likely your DeFi position significantly decreased in value. Again, that's something you don't have to deal with building a stablecoin portfolio, okay? So focus on not chasing those high APRs and just focus on consistency over the long term, right? So again, just reiterating back to my main focus in building a DeFi portfolio is consistent returns over a prolonged period of time and not seeing massive price fluctuations in my portfolio to the downside. Okay. Obviously, of course, you're giving up putting money into stablecoins. You're not seeing any price appreciation on them like you would if you were buying regular digital assets or regular cryptocurrencies. But again, not dealing with the downside in the market volatility in the crypto ecosystem is such a relief. So just to answer this question, I thought that I'd go on a little bit of a rant. How did I stay calm during this most recent market downturn? It was because I have a stablecoin DeFi position and portfolio that did not fluctuate to the downside and constantly earned me yield. Okay. So let's jump into this. So we can see here, DeFi protocols record double-digit losses. Total TVL tanked to 19%. I won't get into this in detail, but again, being in stablecoin positions, I did not have to deal with this market volatility. It's something to consider moving forward, considering that most likely we may see another volatile moment like this in the cryptocurrency asset ecosystem in the future. Now, could prices go lower? Sure, absolutely. But even if we see another bull market cycle, we are going to have to experience and deal with pullbacks and so on and so forth, which again is why I recommend considering starting to build a stablecoin portfolio. I'm not telling you guys to have all your money in stablecoins, but it's definitely something to consider so that way you can deal with these types of market volatile swings mentally, right? You can get through them by understanding that you're still earning, that your stablecoin positions did not fluctuate, and you're still earning passive income. So now that that is all out of the way, just giving you guys a little bit of a perspective and a rant, I just want to show you guys some positions, again, not financial advice, that you could be in. Now, one of the things that has stuck with me ever since starting to dive deep into DeFi and building positions and portfolios out for myself was something that one of the core team members of Velodrome said on a panel discussion, where he mentioned that they built the Velodrome platform for individual users to be like the central bank. Take a second and listen.
Too, and we can get into this later, but we designed a system that will actually allow at some point they will give power to VVelo voters to decide what the emission rate is itself. So we're calling it the Velo Fed, which basically makes VVelo voters the Federal Reserve or the central bank of Velodrome, and they will define.
So take into consideration that right now we are entering into a new financial era where you now have the power to generate yield and passive income on micro amounts of capital. That means you could put $5 into DeFi, $10 into DeFi, $20 into DeFi, and start earning yield. Reiterating back to what the other gentleman said on stage, all of your dollars should be earning passive income. So if you choose to start building a DeFi position using stablecoins, here are some of the options that I've personally utilized and am still utilizing to this day to earn yield on my dollars. Okay, so here you can see this is a position on Ramses that you could possibly enter into. This actually just recently throttled down. As of time of recording this video, you're looking at about a 51% APR. But earlier when I had this pulled up, it was at about a 72% APR. So it does fluctuate depending on market volatility and volume and so on and so forth, right? Right now, about a $1.3 million of TVL locked into this position. So I do think that this is a healthy pull here. We can come over to Aerodrome Finance and we can see multiple different positions that you could possibly enter into in the DeFi ecosystem using stablecoins that are well above 20% APR, which is my personal goal. You can see here is a dollar USDC pool for 21% APR. Here is a USDZ USDC pool for roughly 28% APR. And then here you have a USDC USD Plus offering about 47% APR, and all of these positions have a healthy TVL. You can see the first one has about $56 million of TVL locked. The second one has about $33 million in TVL locked, and the third one has about $13 million in TVL locked, well above our primary target of $500,000 in TVL locked, which again is what our bare minimum is if we're going to be entering into a position. We don't want to see anything below $500,000 in TVL locked. That to me is a red flag. But these all have obviously, of course, a TVL well above that and a healthy APR above 20%. Moving on, we also have Velodrome Finance. Velodrome Finance right now on USDC, USDT is offering, you can see that that just fluctuated live as of time of recording, roughly about 40% APR, and they just met the minimum requirement for our personal checklist of $500,000 in TVL locked, coming in at about $600,000 in TVL locked. Now, if you're looking for other options out there, there are some. Here is another very common DEX in the DeFi space, Turbos Finance, offering about 25% APR on USDT, USDC, with a healthy TVL of roughly about $1.6 million. So it does meet our requirements. And then if none of those positions, float your boat, you also have the VFAT platform where you can actually consolidate all of your positions and enter into different positions on one platform. So you would come here, you would click yield, and you would go in and you can use the search bar here at the very top. Obviously, of course, you have different editing filters or you can choose different protocols and different chains, but let's just leave all these options open and let's just search some different stablecoin positions. And let's just look up USD Plus. Boom. So look at that right here on Base and on Optimism chain, you have 25% APR via a position that you could enter in on Aerodrome, right? You could literally just zap into this position directly on VFAT. And here on Optimism, you have a 61% APR on a USDC USD Plus pool. Now, this one is a little bit sketchier to me because you can see here, obviously, of course, that does not meet our minimum requirement for TVL. But there's only about $16,000 locked into this liquidity pool. For me, that's a red flag. I personally would not get involved in this position. But this one here offering 29% APR with roughly about $13 million in TVL locked, that looks relatively healthy. That is a position that you could directly zap into. You could even go as far as looking up USDT positions, right? Here you can see multiple positions well above our $500,000 requirement for a safe TVL locked in a pool. Now, something I wanted to show you guys here, typing in USDC, USDT, is that when you tweak these settings here, remember, you can go in and you can set your minimum APRs. So if the minimum APR before we tweak this setting, you can see here, some of these APRs are below our 20% threshold. You can see here on PancakeSwap, this has a healthy TVL, but the APR is well below 20%. We don't want that. Here as well, you can see on PancakeSwap, this meets our minimum requirement of $500,000 in TVL locked on the BNB chain, but the APR does not meet our requirement. So what we'd want to do is go in here and we can tweak the settings. We would just type in a minimum APR, of 20%. You could even tweak the minimum TVL, but we'll keep that for now the way that it is. We'll go ahead and hit enter, and then boom, you can see it filters out all the positions, all the pools that did not meet our minimum threshold requirement to kind of just filter your search. So I really like this platform, and it's a platform definitely to consider, obviously, of course, after you've taken into account your risk profile. So with all of this in mind, I just wanted to come on here and rant, answer this question: how was I able to stay calm during this most recent market downturn with the total cryptocurrency market cap absolutely freaking tanked? I mean, it dropped all the way from a high of roughly about 2.4 to 2.5 trillion at the beginning or peak of July, and dropped all the way down to 1.7. This is a lot of market volatility that you as an investor are going to have to be able to stomach and deal with unless you start to build a DeFi portfolio, right? That involves stablecoins. So with that in mind, again, take some of these things into consideration. And none of this is financial advice. I just wanted to go on and answer this question for you guys, how I was able to stomach this most recent market volatility. All of these things are just things to consider. None of this is financial advice. Many blessings to you guys. Make sure that you're staying involved. Make sure that you're staying active. And don't forget that myself and Mr. Aqua will be updating more content as the DeFi space evolves. So make sure that you check every single week, maybe like on Friday or Saturdays, if there are any new uploads in the Wealth 28 Club course material at the bottom of the course. With that being said, as always, be cognizant out there. Many blessings to you guys, and I'll see you all in the next video breakdown.